In fact, bear markets rarely commence with crashes. You go back through history, I think 29 is about the only one that started with a crash. And sometimes they didn't even have a crash. 2000 to 2002 and the S&P went down 50% and never had what qualified as a crash. Just bloody downside, layer by layer. So anyway, we think it's begun. Now, why is that important? It's important because it causes movement of money. Investor money, that especially late investor money, which is a lot of it, a lot of foreign capital as well, to flee that market and go elsewhere. And if you go back through history, and we've done studies on it and produced reports showing the evidence, gold is always the place to be, period. Now, 29 to 32, when we had the collapse then, you couldn't buy gold in the U.S. Roosevelt, it was illegal, like a drug, okay, whatever. But you could buy Homestake Mining, the biggest gold miner then, and it went up like 1,000% during that time, okay. And then since like the 70s, when you had the bull market peak of the stock market, which finally ended in a crash in late 74, gold went up during that time. In fact, during that crash period in the stock market, gold exploded. That's when it went up to $200. 2000 to 2002, during the dot-com bubble break, which was hardly a bubble compared to what we have now. I would call it, 1/10 the size of this bubble. Gold went up. In fact, gold went up from 2000 to 2011. It didn't just go up during those couple of years. And, again, 2007 to 2011, 2009, the stock market went down and gold went up during that time. Yeah, there was an interruption in gold's upside that occurred simultaneous with a crash event that occurred in the stock market, which was a full year off of its high before the stock market ever had a break that you could call a panic crash. And gold participated in that for like 1 month and immediately turned around and resumed its bull trend. So what we've got now is the beginning of that breakage and the movement of the money. And another factor is going on that we technically identify, and that is the foreign exchange markets. If you look at the major Forex markets, like the dollar index, which is an upside down version of the euro and the yen, basically 70% of it is the dollar index. It's been in a dull 7% basically range for over 2 years, where it's been the quiet one. In other words, there's a major asset category over there that isn't doing anything, not provoking movement in any other market. It is now breaking below our annual momentum trend structures. Now you look at price and you say, well, it's not breaking anything. It's just sort of in the lower third of the last 2-year range. But for us, it's breaking a multi-decade uptrend on annual momentum of the dollar, which tells us we're about to commence a significant downside in the quiet one. This time it's going to be noisy, but to the downside. So that's another elemental factor. And it's interesting that it's occurring simultaneous this month with the breakage in the Nasdaq 100. So it's a double whammy, and that's a double impetus fuel for gold. So anyway, I think it's going to be an interesting year, 2025, and I think it's going to be far more volatile than what we've seen in the prior years. And for the monetary metals, I think instead of this staircase arm wrestling process, which has been upside, you're going to see an acceleration, a dramatic acceleration.